The previous methods covered fixed time intervals that are repeating cycles. They can be used when a chart is less range-bound or reaching new record highs or lows. It can be more effective to use the Fibonacci time zone in sharp and drastic movements at new record ranges. A Fibonacci time zone has intervals based directly on the Fibonacci sequence. The starting length is determined by the same method as fixed time cycles and intervals. Proportions are determined by the initial interval between interval line 0 and interval line 1. The intervals up to interval 3 are equal, then they rapidly expand, starting with interval 5 due to the rapid growth of the Fibonacci sequence. As usual, trend lines can help identify areas of even greater significance when intersecting with interval lines and price levels, but this may not always be possible. Not all major peaks and lows can be approximated, even when the initial interval is a shorter duration. It is also possible to use two downswings or two upswings to define the initial interval, instead of one upswing and one downswing. When a trend begins to slow down or produce less frequent retracements, it is often best to start the Fibonacci time zone from some of the most recent swing points on the chart that still define major features. This is often a peak that defined previous all-time highs. Using the length of a major trend similar to a fixed time cycle and interval can be useful up to interval 3, but can produce less useful intervals afterwards. This is especially true for a chart of a shorter time frame, since intervals significantly expand to miss plenty of small and even large features. Even if a trend covers a large price range in a relatively short period, it is normally better to start the Fibonacci time zone from the main reversal to the first retracement of the new trend up to interval 3, similar to a fixed time cycle and interval. Then when the trend reverses, a larger interval can still be of some use. Using the final swing points in the previous trend is also an option similar to fixed time cycles and intervals. There are many similarities to fixed time cycles and intervals because of the intervals up to interval 3 being equal distances. It can generally be said a Fibonacci time zone is more trend-specific, meaning it is usually less effective after a major reversal or even retracement takes place. It is also the reason why the length of an entire trend should usually not be used to define the initial interval. On this chart, a new Fibonacci time zone is defined by the first upswing and retracement points for excellent coverage of early uptrend development and even the larger and longer-lasting retracements that follow. Using two upswings, two downswings, or an upswing and a downswing to define the initial interval is highly variable, and various combinations of the three choices can be chosen. There is no concrete set of conditions to choose one choice over another. Trend lines can help to an extent in determining which interval lines are more important, though once again this can be limited and may not even be possible sometimes. In the case of a large trend, a Fibonacci time zone has the advantage of covering relatively long durations without necessarily using an initial trend that covers a long duration.